Good morning, retail traders. Today I'm going to bring you this sneaky snake trading strategy and talk about the indices and where I feel like we are in the market. This is a trading strategy that's brought to you with moving averages, chart patterns, and being in the now. So let's go ahead and go straight to how I feel about the market. Now, the market always has some kind of correction. I used to, back in the day, used to be every 4 years, we'd have some kind of pullback. And then we'd have some kind of pullback every year, maybe 10%, and then we'd go ahead and continue to the upside. But everything's changed. We've had a lot of different changes going on. We've had a lot of printing of money. We've got a world war. We've got chaos in the streets. Just a lot of bad things going on in America right now. We've got government overspending, overreaching. We got trickle-down economics, where we print the money, hand it over to the CEOs, and then they do what they want with it. So there's a lot of stuff going on that just shouldn't be going on. So we're going to go ahead and look at the Dow Jones, but there's always a correction in the market, always. You'll get one every 4 to 6 years, and then you'll get one every year after a good run. Last year was just a total complete pullback. We didn't have, it was definitely a sell-off like we saw back in 2007, 2008. And I think even back then it was probably a little bit more dramatizing because everybody had their hopes up and it just tanked. I mean, I was there to watch it. We went from 12,000 to 6,500. And the same thing happened last year during the Biden administration when we more or less said, go ahead and start the war and we'll pay for it. Which we can get into another subject about that. But I'm a no-war guy. I think we can live in peace and be happy. All you got to do is talk, and the talking ain't been there. So that's part of the market conditions, I think. That's why we had such a hard sell-off last year, is the reaction to the war, to the supply and demand was cut off. We had the government shut down, which led to economic chaos, and that's why we had to print the money. Part of the reason why we had to print money because we shut the whole U.S. economy down, unless you're a government employee, and then you got your checks in a way. But so we're looking at the market right now, and I've called the resistance. This is a weekly time frame right here. I called the support level off the 200, and that was not on the Dow, but definitely I called the 3 black crows back in September, and then we had that bounce back up, created an ascending triangle, and then broke out from it. And that's where we are right now, is we're at that shoulder line of the two-headed snake. So you got a shoulder line right here, and that's what I called resistance. Said once we hit that, we'll probably pull back some and maybe hit the top of this here channel. What I do with chart patterns is when I see a pattern, like for example, this here ascending triangle, just like that, they like to break out of resistance, and we hit resistance on this shoulder line on the Dow Jones. So she came back, and I think she's going to come back and hit that 9 EMA, 9 or the 8, whichever one you like to use. I use the 9 because I want to get it. I want to hold just a little bit longer, maybe, or see if I can't touch that 9 and bounce off that 9. I think people get out of the trade too early with an 8. But that's my opinion. So I think we're going to come back down here and hit this 9 and then bounce back up and create a Darvas box to the right. If we get into any drama, we could correct a little bit more and hit this here trend line off that triangle. And that's right around the 34.14 area. So somewhere in there, maybe at the top of this channel will be no lower no lower than that right there, I think, for the correction, for the 10%. Right now we're right at about 3 from the pullback right here. So if we come back here and hit this, look for about, I'm going to say roughly around 9.2% from the top, and that'll be a great place, I think, to start adding on. Low support is going to be the bottom of that channel on that triangle. Resistance to break will be the shoulder line at 35,621.27. So the next one we're going to talk about, if I'm watch list here, is the IWM. We'll pull up, we got the weekly up here. We're going to clean this up. To the 3-year. So here we've got a wedge. We've got a wedge breakout, and it kind of broke out of that resistance. So it's going to come back and touch that wedge. But right now we're on the 9. So this is what I'm really looking into next week on these indices. I'm looking for a couple days pop and then a couple days drop. So we're going to see what happens on Monday. Monday might be the only good day to trade to the upside, and then we'll play the dips on the rest of the week. But I think we can come back up a little bit and find resistance up right around the bottom of these here bodies of these candles, right about in there, maybe to the top of the candle right there that we closed in on, that we hit the high on, consolidated on Friday. So I'm going to draw a little price line across where I think that resistance line will be, and these are on the weekly candlestick time frame, and this is going to be the resistance line that we're going to need to break to get it up to a higher level. Now we did pull back to a tweezer bottom with a little bit dip, but hit that 9. So if that 9 fails, it's an easy drop back down to this next moving average at 185, 186, and no lower than that, and see if that holds. And that's the 65 EMA, if I'm correct. Yes, it's the 65 EMA. So right now we're at the 9, and the 9 keeps the thing bullish. But in these market conditions, I think we're going to pull back, and we're going to find a real solid support at that 9.2%, and then retrace back up to the top. Next one's going to be the QQQ. Well, let's go ahead and go to the yearly on this. On the yearly, we hit the 51. We've had a pretty good 2-week sell-off. So we really got to take this in perspective, that the private sector and the fat cats are two different entities. They're going to take advantage of these dips because they got millions and billions of dollars to buy and scalp it for a couple of bucks. So I'm going to use the body of this candle right here as a resistance level. If we break that resistance, we'll go higher. If not, we'll pull back down and hit this 9 again. So I've got a trend line, and that resistance level is going to be right there at 191.30. If we can break 191.30, we could probably go ahead and go higher this week and hit the top of that channel at 193.04 and then come back down again. So these are on the daily time frame. Pretty excited about that. Now, the other thing you can do too also is draw a trend line from here to here, and we're going to do that right now, and that'll be your support line also. So let's go ahead and put that price line in there. We're going to take it to, being these are on the weekly time frame, I'm going to take the wick, and we're going to see where this lies. That could be another resistance to break, that 195.67, somewhere right in there, 195.50 area, which would be the top of the body of that candle right there. So that's our confirmation. But that could be a very hard resistance this coming week, and that the solid support needs to hold at the 9 or we hit the 65. The next one is going to be the SPX. This is on the weekly time frame. So we had a head and shoulders right here. Head and shoulders right here. So we're going to draw that trend line, price line across that head and shoulders. And I'm going to use this trend line. We're going to take the body of that candle, we're going to run it with the body of that candle. We're going to stick it over the right. So that's going to be our resistance to break. That number right there. Now this is the head and shoulders of this snake. So on the way up, that's what I called resistance, was this shoulder line. And we popped up a little bit above it, and now we've pulled back to the 9. So that is a solid support. We bounced off the 9, we bounced off the 9, we bounced off the 9, we bounced off the 9. This 9 is very important to hold. If we don't hold this 9, we could have a pretty good drop on the SPX to the 21 SMA, which is the top of that candle right there. Being the weekly time frame, I'm going to use the wick for a support line right there off this here candle. Then I'm going to use the body for a strong buy. So if the 9 doesn't hold, we could pull on back and hit this lower support level. This is on the SPX. And our resistance to break, again, is going to be this resistance line of the shoulder of that head and shoulders. And we're going to draw a price line on that one right there and estimate, probably 45, 48 something. 45, 48. And actually, I'm going to take that down. No, I'm going to leave it right there. It's right on that shoulder. No, I want to take it down just a notch. Right on the body of that candle. At 45, 36, 18. So that's got to be our resistance to break. So we're going to pull this up to the yearly. Real tight in here. Real tight. So, that's going to be a hard resistance. That's a new resistance line. And we're now on the daily, we're on the 50 SMA, which is a pretty strong support also, and it does fill the gap right down here, which makes it a solid support. So we've got many confirmations that this could be solid, and we could get a nice little bounce back up here to the 9, which is right around 44.92, with a hard resistance again at that 45, 36, 18. If it does not hold that 50, it's a pretty good drop easily down to the 65. But right now, you're at a very solid support. On this SPX. I would think we could get a little bit of rebound on this and then pull back some. But that sending triangle, the 50 SMA, just looks like a real nice place. And with the 2-week sell-off, we could definitely run back up and hit that 9. I'm pretty solid about that. Did we do the SPY? No. So or did we? Well, I can't remember if we did it or not. I think we did. But here again, you've got that head and shoulders. That's your resistance line. Your support's going to be the 9. So that's going to be it for the indices. I'm bearish at heart. Now, I'm a scalper right now. I'm a day trader. So I'm looking on the bearish side of the market, and I'm playing defensively. I don't want to get caught. I'm tight stops. Make sure you're in the right mindset when you come in here in the morning, because this could get pretty volatile. Now, just for example, the SPY, you pull up the 20-day time frame. That's one heck of a sell-off to support. So we can come in, we had what, 2 weeks to sell it off. Now did we dip below where their resistance was? I don't know. I think we're at a support, the 9 on that daily or that weekly. So we got to hold this 444 area, or we go on down farther next week. We got to break this 200. We got to break this channel of resistance. And you can see it right here with these two tops. So you just draw your trend line. You can draw a couple on this one here. As a day trader and as a scalper, that triple top, boom, she'll come back down in the channel. Or she'll hit this here resistance right here, the 200 SMA, and pull on back and hit that bottom channel. Now we've had 1, 2, 3 on the dip right here. So we could come in Monday, try to break resistance again, and then come back down. So the hard resistance is going to be this triple top at 450.70. That's on the SPY. Now, you know, Tech has been involved in this pump. I didn't fall for it. Once we hit that resistance line on that head and shoulders, I started saying, no, this is bullshit. Don't be taking these 650 NVDA runs. They're calling out NVDA to 650. And I'm going, yeah, right. 600. I'm saying, no way. One thing that I don't hear, and we've already had it, is a recession. We had a recession back when they shut the government down. I lost 3 accounts during that period. And I went without work for, 3 months. I had to mow yards and do whatever I could to keep busy. With the jobs that I had, because all the employees were laid off. So I wanted to keep me working at these sites. I had to do something. So I said, hey, let me mow the yard. And so I hired some guys to mow the yard. I worked for free, but I didn't get paid that well like I did on my regular income on my private business. So we had a recession. We had a government shutdown. That's not been taken into account. We went into a new economy. It's a gig economy. It's not the same kind of economy that we had before COVID. So a lot of changes has happened, and the same old rules are going up in Washington, and they've not adjusted to the gig economy. So that's another reason why I think we're going to have another pullback in the market eventually, sooner than later. Irrational exuberance, once said. So NVIDIA, I'm saying no. I'm fighting all these fat cats on this stock. I'm trading it, of course. And we had that big run. They were pumping the shit out of this stock. And then when it got up here to 480, we're going to 600. They were saying that down here. I was totally against it because we had too big of a gap up. After a shitty year last year, all of a sudden everything just turns around on rumor of AI or the AI sector bumping. So, called this resistance out when the market, I felt like we hit that shoulder line. And now we've pulled back to a real solid support here on NVIDIA. So I would probably take this in consideration next week. We hit that 65 EMA on the daily time frame. And this is the Fibonacci pullback to 68.2%, which is another confirmation that we could get another rebound to the upside and find some resistance back up here at the 38.2% on the bottom of that Fibonacci, which would be right around 61.8%. The pullback would have been 32 or 38. So yeah, that support level right there is now going to become resistance. We had support, and then the third time it failed, came down and hit the 65. So I'm expecting it to come up and hit that triple bottom and find some resistance. And that's going to be, again, price line at 437, support no lower than this here 65 at 402. And that's got to hold. If not, we'll come back down here and hold this bottom support. That's NVDA. Then I got what? Tesla. Tesla, I think, a lot of weakness in Tesla right now. I think we can touch the bottom of this gap on this daily time frame, and we're going to put a price line right there. And yeah, we should be able to hold that on Tesla, and that price line's right at 235.08. If that gap fill does not hold, we could come back down and hit the bottom of the top of that candle right there, which would be right at 228, and the 220 tweezer bottom, 223.82. So yeah, I'm not all guns bullish on I'm bullish. I love Tesla. I've traded Tesla for such a long time. I trade it every day. I'll scalp it every day. But bullishness, we're definitely down here as double bottom support. So you really got to consider, is this going to be the double bottom that we're looking for the reversal out of the snake? And that could be true. That could be the case. We got a nice little doji right here, long leg doji that could probably hammer, that could probably bring it back up to the 9. We hit the 9, 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 we hit the 9. So this thing can come back and hit that 9 resistance, and that price line's right around 250. So that's going to be your hard resistance to break. Support to hold is going to be the double bottom, and I think that's right around 240. 240 does not hold. We'll go down to the gap fill at 235 and see if that can find support and bring it back up to the gap. Top of that gap. Anything else? I think I'm going to go ahead and cut it off here. So basically, this is the sneaky snake trading strategy where we try to study chart patterns, moving averages, and being in the now. Right now, I'm on the bearish fence, but I think we're consolidating, and that this is a correction that is needed badly. Needed badly to consolidate out of this huge run we've just had. Now, I can't say, I've been trading for 20 years, okay? I've not seen a reaction. I've seen reactions, but I've not seen something like this in that 20 years of trading. It was fun to watch the Obama crisis. It was fun to watch the 2011 dip. It was fun to watch. Not fun to watch at all, but it was a learning experience of the Biden administration, the irrational exuberance that went into the White House, and everything had to be changed. I'm a business owner. I've owned businesses for over, since 2011? No, I'm sorry. I take that back. Since 1994, when I graduated college, I opened up an art gallery. So I've been in business for a long time. And it's just real hard to run a small business under these kind of circumstances. And I feel for everybody out there that has a small business, and inflation and the price of rent and the gas prices, the cost of food to run your restaurant. And then you got to pay the wages and the taxes that we're getting threatened with, being taxed, overtaxed. So it's not a good atmosphere for the small business, but the big businesses thrive on it. So like I said, I put my hand out there to anybody that owns a small business in this economy. It's not fair, but I hope you can be able to weather it out, and we'll get a government in there that is more pro-business to the small business and to the private sector. So that's it. Right now, I'm bearish, and I'll keep playing scalping until we break that resistance level of that shoulder line on the weekly time frame, and I'll just keep playing the dips. It's a great opportunity for big paydays right now. We'll catch you later. Have a great day.